and welcome to the August 5th, 2026 meeting of the Governmental Accounting Standards Board, day 2 of our board meeting. We had a productive day, got through things pretty quickly. We did our, looked at a tech plan item, did our implementation guide, thank you, and then going concern severe financial stress. It was a big day. And today we've got 3 topics as well, starting with revenue and expense recognition. Pam, I'll start with you and get us going.
Thank you, and good morning, everyone. So we're continuing our discussions about measurement today. And so for that, we have 2 papers for you to discuss, and I'm going to turn it over to Kara, who's going to kick it off for us with paper 1.
Thank you, Pam, and good morning, everybody. Paper 1, the focus will be continuing discussions regarding allocation as it relates to measurement. Just to take a step back to talk about the prior tentative decisions regarding allocation, at the February 2026 meeting, the board made tentative decisions on 3 general allocation principles. One was that the total binding arrangement amount should be allocated to each recognition unit of account. And then the board also tentatively decided upon 2 objectives for allocation. One is an objective from allocating the total binding arrangement amount to each transaction, and then a second objective for allocating the total transaction amount for category A transactions to the performance obligation. The project staff describes this as a 2-tiered allocation approach. So first allocating the total binding arrangement amount to each individual transactions within the binding arrangement, and then allocating those amounts to their applicable recognition unit of accounts. And then there's a figure in the paper on page 2 that summarizes that approach. At its May meeting in 2026, the board continued its deliberations about allocation by discussing the methodology for allocating consideration and made tentative decisions related to that for both those 2 tiers of allocation. And the methodology that was decided upon was that a government would use observable amounts that are within the binding arrangement. And if observable amounts are or if there's no observable amounts or they appear to be unreasonable, a government would use an allocation methodology based on estimates. Based on the discussions at the May meeting, the project staff wanted to kind of take a holistic approach to looking at how allocation would be applied in practice, and that would also consider whether this allocation methodology could be simplified in any way. So the purpose of this paper was to revisit the tentative allocation methodologies, really by evaluating the methodology from allocating the total binding arrangement amount to each transaction. So the paper looks at 3 circumstances in which a total binding arrangement, or in which a binding arrangement can give rise to more than one transaction, which would include a binding arrangement with multiple category B transactions, a binding arrangement with multiple category A transactions, or a binding arrangement that would include both category A and category B transactions. So first, looking at circumstances in which a binding arrangement has more than one category B transactions. The project staff believes that this circumstance is most likely to arise with certain imposed transactions. So these would include imposed on property taxes or special assessments, transactions that are imposed on an underlying transaction, such as sales tax, or also some certain regulatory or punitive fees, which we describe those as impositions on actions committed or omitted. However, the project staff believes that measurement is not achieved by allocating one total binding arrangement amount to each individual transaction in these circumstances. Instead, a government generally measures substantially similar transactions in the aggregate. So we're measuring all property taxes in the aggregate as or when the imposition occurs. Or a government may use a rate or a fee in a binding arrangement to determine the amount recognized for each transaction when it arises. And the example we used in the paper was regulatory fees for CPA licensures. So therefore, the project staff does not recommend or believe that an allocation methodology is necessary for imposed category B transactions. The project staff also reached the same recommendation for transactions with qualifying requirements and general aid and shared revenue transactions, and that is that a separate allocation methodology is not needed, but for different reasons. In these cases, we do generally believe that a binding arrangement will just contain about one transaction, but the recognition unit of account may be lower than the transaction level, such as each dollar of qualifying costs, each incremental qualifying requirement, or payment due dates. So the project staff does not believe a separate allocation methodology is needed to determine the amounts attributable to each recognition unit of account because we believe that the terms of the binding arrangement and the structure of those transactions already would establish those amounts. And there are examples included in the paper that illustrate that perspective. The second circumstance that we talk about is binding arrangements that include more than one Category A transaction. And we believe that the circumstances involving Category A transactions are different because measurement ultimately requires determining the amount attributable to each performance obligation. And we believe the analysis in the paper provides that regardless of whether a binding arrangement is viewed as having multiple Category A transactions or a single Category A transaction with multiple performance obligations, the allocation outcome is the same. That is, the government needs to determine the amount attributable to each performance obligation. And in the paper, we include an example in which one binding arrangement has two Category A transactions, one transaction with three performance obligations, and one transaction with one. And in this example, the allocation methodology, whether it was to use observable amounts or to allocate based on a different methodology based on estimates, we're basing that how to allocate on the individual distinct goods or services, not at the transaction level. So therefore, the project staff believes that that intermediary step of allocating the binding arrangement amount first to transactions does not change the outcome. And we believe that the methodology tentatively decided upon at the May meeting should be retained, but revised so that it is directed to the performance obligation within the Category A transaction. So total binding arrangement amount to performance obligations rather than going from Category A transactions to performance obligations. And then the last scenario is binding arrangements in which include both Category A and Category B. The project staff really only identified limited circumstances of this instance, and we have talked about it in prior meetings. The common example that we've discussed is a fundraising example in which there's both a donation and a performance obligation. However, due to the lack of prevalence within this circumstance, we believe that the allocation methodology is not necessary. And we do believe that the board's tentative allocation decision regarding the principle, which is to allocate consideration in a total binding arrangement in a manner that provides faithful representation of the economic activity in each transaction, provides a sufficient basis for allocating the total binding arrangement amount to each transaction that has been identified as either A or B through categorization. So in summary, the project staff has three primary observations as it relates to the allocation methodology. First, we do believe that the methodology is needed for Category A transactions to determine the amount attributable to each performance obligation. And then second, we don't believe an allocation methodology is necessary for Category B. And third, we also do not believe it's necessary in circumstances in which a binding arrangement has both Category A and Category B. So based on those observations, we recommend that an allocation methodology be limited to Category A transactions. And therefore, we also recommend removing the tentative methodology for allocating total binding arrangement amount to each transaction within the binding arrangement. So that brings me to the board discussion questions. Question 1, does the board believe that an allocation methodology should be limited to circumstances in which allocation is necessary to determine the amount attributable to each performance obligation within a Category A transaction? And the project staff recommends that a specified allocation methodology should be limited to circumstances in which allocation is necessary to determine the amounts attributable to each performance obligation within a Category A transaction. And task force members who provided feedback on all the questions in this paper generally agreed with the project staff recommendations.
Thanks, Kara. Board member responses to question 1. At least want to start with, I appreciate you guys kind of taking the feedback from the board at our May meeting and going back through this analysis. I thought the analysis was really good and thoughtful, and trying to reduce complexity when we can. So I appreciate you guys doing that. Robert.
I agree, Joel. I think the rationale that was put forth in the paper was very solid, and I just simply agree with the staff recommendation.
Thanks, Robert. Lisa.
I also agree with the staff recommendation. It was a very good analysis.
Thanks, Lisa. Diane.
I agree with the staff recommendation also, and I like the simplifying it. I think that's really helpful.
Thanks, Diane. Chris.
I also agree with the recommendation, and this is something that you guys have continuously done throughout this project as we've looked at these things, right? And the first step was to make sure that we comprehensively addressed something and we understood every single little part and how it moved and worked. And then the second step, which you guys have always succeeded at, is to reevaluate and determine if it, I don't want to use the word clunky, but if it's not as efficient as it should be. And so going through this, it makes so much more sense to remove because it adds a little bit of confusion or hesitation. So thank you.
Thanks, Chris. Jackie.
I also ended up agreeing with the staff recommendation after having a discussion. I was getting hung up on methodology when I talked to Pam and Kara, because to me, using the observable amounts is an allocation methodology. So they're actually doing that in every one of the transactions that they're looking at. And then the whole thing about stepping out of that binding arrangement to the observable amounts to the performance obligations instead of going through transactions, which we had the whole big discussion on before. I told them I was channeling Jeff when I was talking to him, and Chris and myself too, because we had talked about the idea that mentally people are going to go through this. And we talked about that too. And I still think that mentally people probably will look at this and say, what kind of a transaction do I have here? But we're not forcing them to do that. So if they mentally do it, no biggie, it's fine. And I do think that by laying it out the way we are laying it out, it makes it easier for the users to implement this. And I agreed with the staff recommendation after the discussion that, as it was laid out, made perfect sense to go directly to what we were looking at, rather than having to go through the two-step process when that kind of information was already an observable amount in the contract. Just assign it. So.
Thanks, Jackie. Carolyn.
And I also agree with the staff recommendation for a lot of the reasons that my colleagues have already expressed. I appreciate you all going back and looking at, is there a way to simplify this? And if we don't need an extra step, let's thoroughly come to that conclusion that we can reach the same conclusion with just one step. So with all of that said, I do agree with the staff recommendation.
Thanks, Carolyn. And so I'm trying to think about what you said, Jackie, and I guess it's we took steps of the methodology away, but there's still kind of this overarching principle, right, that will be part of the standard. That it was always, to me, the category B stuff kind of makes sense that you described. It was always this: how do I break a binary arrangement that includes an A and a B out? Like, what are those observable? Like, that was what I bumped up against a lot. And I still think it will be in those, it's not that they never happen. They're not common, right? But they'll happen at times. And I don't think that the methodology we had was really going to help with what's really hard, is trying to break apart this thing where you've got two different things going on within one binding arrangement that aren't maybe necessarily related to each other. And so you just have to end up identifying that those are two different sets of economic activity. And that's why our kind of overarching principle will help them. It's still going to be hard, but it was always going to be hard. And so I think what we were proposing wasn't going to necessarily help that. In my mind, I've actually confused it a little bit. Now, at least we have this overarching principle. Will there at times be people that look at the same thing and get to different answers about what's the economic substance when a donation is paired with something that is a sale of goods or whatever? Maybe, but I think that this is still a better approach. It's more efficient. And I think it will make more sense in the broader context of all that we're doing categorization wise, et cetera. So, I mean, I agree with the staff recommendation, but I don't know if you have any reaction to what I said, but that was, and thinking about what you said, that was the way I had thought about it.
No, I agree with you. And like I said, I was getting hung up on the way they were using the terms like methodology and those types of things. I'm going, they're still using a method to allocate, whether we say
I
they are or
almost thought
not.
you were saying they're not using a methodology, and that's why I was like, well, there kind of is a methodology, right? It's just more principled, but
Exactly.
Okay.
Mhm.
Thanks. All right.
Okay, so question 2 is, does the board believe that the tentative decision related to the methodology proposals for allocating the total binding arrangement amount to each transaction should be removed? And the project staff recommends that it should be.
Thanks, Kara. Board member, thoughts on question 2? Jackie.
Based on my response to question 1, my response to question 2 would be yes. I think that I agree with the staff recommendation on tentatively adjusting our decision with regard to assigning the amounts to each transaction.
Just sign me up for what Jackie's just said. I don't, when Lisa, Diane, Chris, you were like, ooh, it was like a wave.
I also agree.
So based on the previous question, I agree also.
Same here. I agree with the recommendation.
Carolyn, you guys didn't coordinate a wave. You were trying to. Carolyn and Robert.
I also agree with the staff recommendation based on the conclusions I reached in question 1.
I concur with the staff recommendation.
Okay, and the last question, question 3, does the board believe that the tentative decision related to the category A allocation objective and methodology proposals should be revised to clarify that the total binding arrangement amount should be allocated to each performance obligation? And the project staff recommends that it should be.
Thanks, Kara. Diane.
I agree with staff recommendation on this too. And I just think this is more direct and straightforward. And the examples indicate that this will work.
Thanks, Diane. Lisa.
I also agree with the recommendation. I really like the simplification of it, and it makes perfect sense based on the entire 3 questions.
Thanks, Lisa. Robert.
I agree with the staff recommendation. And again, as always, examples help to illustrate this, and particularly as the project moves forward over the coming years, I think that's going to be very helpful for stakeholders to understand the concepts, because sometimes this does get just a bit technical.
Thanks, Robert. Carolyn.
And I also agree with the staff recommendation.
Thanks, Carolyn. Chris.
I agree with the recommendation.
Jackie.
I also agreed with staff recommendation.
Thanks, Jackie. In the end, I agree with the staff recommendation. I like the more direct approach. I did wrestle with this one a little bit. In that, I think at the last meeting, it was always this unreasonable part that I bumped up against, partly because we've taken equal value out of our methodology. You know, category A is something for something. And I worry a bit that unreasonable becomes a little bit like, how is somebody going to judge what something's reasonable if they're not going to bring fair value into it? And so I thought about continuing to bump a little bit here, and then we talked with you guys at Alan and the team a bit. And I understand the reason we need to do it here. When you only have category A transactions, they're all something for somethings. And so not that governments have a lot of incentive to do this, but sometimes they might. You would, if you didn't include this unreasonable, you would have the ability for them to structure a contract and assign a value to one of the performance obligations that's very different than the value they assign to another performance obligation in order to affect the timing of recognition of parts of the agreement. And while I don't know that governments would do that a lot, it certainly makes sense to avoid them having the opportunity. And if you kind of step back and look at it, and it's all a bunch of somethings for somethings, and we have variable consideration or different things going on that we're having to assign. We have discounts, for example. Does it really make sense? Are you really giving this huge discount on this one item, but no discount on this other item? You're kind of pooling it all together. It's all one binding arrangement. And so spread the discount out among them, right, in a way that isn't not unreasonable. And so in the end, I got over my concern with unreasonable. I see why it's necessary. And so I agree. I do like that we went more direct, going straight to the performance obligation. And I agree with keeping the rest of the kind of methodology of how you evaluate getting there.
All right, thank you. And so obviously we'll be making conforming edits to those discussion questions we just went through to the tentative decisions that were made previously. So that's how that will all show in the tentative board decisions. So moving on to paper 2. This paper asks the board to consider how changes in estimates should be applied to transactions within the scope of the project. Excuse me. The focus is primarily on estimates that arise from variable considerations, such as performance bonuses and discounts, and whether this project should include specific application guidance. The paper also addresses whether changes in estimates related to collectability and refundability should be treated differently. So in the GASB literature, Statement 100 provides the core accounting treatment for changes in accounting estimates and requires that such changes be reported prospectively by recognizing the change in the period in which the change occurs. However, Statement 100 operates as general guidance and also states that specific application guidance may be provided in particular individual pronouncements when the board determines that such guidance is needed. An example of specific application guidance can be found in Statement 42 related to capital assets, which provides that changes of estimated useful lives and salvage values are accounted for on a prospective basis in future depreciation expense. FASB guidance in Topic 250 follows a similar general approach, and then Topic 606 includes more specific guidance by requiring that changes in the estimated transaction price of a satisfied performance obligation be recognized in the period in which the transaction price changes. So the issue for the board is not whether changes in estimates should be accounted for prospectively. Statement 100 already covers this and establishes that principle. The issue is how prospective application should work when a change in estimate relates to revenue and expenses in this project. If the project is silent, governments would apply Statement 100 using their professional judgment. That may be appropriate in some circumstances, but we believe that silence on this aspect could lead governments to analogize to familiar guidance from Statement 42, in which changes in estimated useful lives and salvage values are applied by spreading the effect over future periods. The question is whether that approach would faithfully depict revenues and expenses in this project. So we ran through an example in the paper The example relates to the construction of a bridge. State A enters into a 5-year binding arrangement to construct a bridge for a local government. The fixed consideration is $50 million. In addition, State A will receive an $8 million performance bonus if the bridge is completed at least 3 months ahead of schedule. So assume that in years 1 and 2, State A is uncertain whether it will receive, meet the criteria to get the bonus. But in year 3, the State A determines that it is probable that it will complete the bridge early and therefore is probable of being entitled to the bonus. At that point, the government needs to determine how to apply the new estimated total of $58 million prospectively. So under what we describe in the paper as the catch-up method, State A would recognize the portion of the bonus attributable to the performance obligations satisfied to date in year 3. Assuming the bridge is 70% complete, at that point, State A would recognize $5.6 million of the $8 million bonus in year 3. That amount includes the portion attributable to years 1, 2, and 3. And then the remaining $2.4 million of the bonus would be recognized in years 4 and 5 as additional progress is made. Alternatively, under what we describe as the spreading method, the government would recognize the bonus equally in the year the estimate changes and in future periods when progress is completed. So in this example, that would spread the $8 million bonus equally over years 3, 4, and 5. And so a portion of the amounts that are attributable to performance already completed in years 1 and 2 would be postponed to future periods. We believe that if the board chooses to remain silent about the manner in which a prospective application of changes in estimate in this project are to be treated, governments most likely would default to the spreading method because that's what they're most familiar with in the application of changes in estimates related to capital assets. For purposes of revenues and expenses in this project, we do not think the spreading method would faithfully depict the amount attributable to performance in each period. In the bridge example, the spreading method would shift part of the bonus related to years 1 and 2 into years 4 and 5. That would make future period revenue larger than the amount attributable to that future year performance. The project staff recommends the catch-up method due to the fundamental recognition and measurement tentative decisions that the board has already made in the project, primarily that recognition occurs when control is transferred and a performance obligation is satisfied, and that consideration is allocated in a manner that provides a faithful representation of the economic activity in each transaction. So we recommend that specific application guidance for changes in estimates be provided, and that guidance require the prospective accounting treatment for the change to apply to all satisfied performance obligations in the year of the change, which we call the catch-up method. So that brings me to board question number 1. Does the board believe that specific proposals for the prospective application for changes in estimates should be provided in this project? We recommend that approach so that the application of the changes is consistent with the other measurement and recognition proposals in the project. And I'll turn it over to Marissa for the task force feedback.
Thank you, Pam. Task force members who provided feedback on this question generally agreed with the project staff recommendation.
Thanks, Pam and Marissa. Board member responses to question 1. Diane.
I agree with the staff recommendation on this. I thought the example was really helpful to kind of see that catch-up method versus spreading it out. So I think that by specifically prescribing how the change would happen, then we can keep this consistent with all of the tentative decisions we've made in this project. And also it's consistent with how FASB has been very prescriptive in topic 606 when it comes to a change in estimates. So I think this is important to do.
Thanks, Diane. Robert?
I also agree with the staff recommendation. I could just parrot what Diane said because that's basically was my comments. But I think to reduce any ambiguity in this and being prescriptive will be helpful.
Thanks, Robert. Jackie?
I also agreed with the staff recommendation on this. Usually I'm not a prescriptive person, but based on what my answer to number 2 is going to be, I think that it's important that we provide guidance in this area because human nature being what human nature is, the path of least resistance is usually the one taken.
Thanks, Jackie. Chris?
And I can parrot most of what Jackie said because I'm usually not the prescriptive one as well. But I think in this case, given the alternatives, we want to be very careful and make sure that they are using that catch-up type of method instead of allocating those amounts going forward. And we want the consistency, and we just want the conceptual. I can't find the word; it's a little too early in the morning. But we want it, grounded in. I'm sorry, but I agree with the recommendation.
Yikes. You were doing well, and then you just kind of. Lisa?
I also agree with the staff recommendation for the reasons stated.
Thanks, Lisa. Carolyn?
I agree with the staff recommendation for the simple fact that this will give us consistency across our stakeholders.
Yeah, I agree with the recommendation, and I think similar to my fellow board members, sometimes maybe it was prescriptiveness or extra words or can be viewed as adding complexity. And so you're kind of like, do we need these words? Do we need this step? Do we need this prescription? And I do think that we would get very inconsistent applications. I think if we aren't prescriptive, I think some people, even if you look at 100 and you're saying, well, it's prospective and that's the base. Well, what is prospective? Which of these versions is prospective? They're both prospective. And so I think we would get different results. You get some people say, well, 42 and how we deal with capital assets, let's spread it. Like some people would say, well, if that 606 does this, and so or would look at it differently or have some other choice of what perspective is to them. And so I think to prevent those wildly different results, I think this is actually almost simplifying because we're just telling people instead of making them kind of figure it out, we're just telling them what to do. And I think in this case, that actually reduces complexity and certainly improves consistency. And so I agree with being specific in this guidance about this choice.
Okay, thank you. And so question number 2, if the board tentatively agrees to provide specific proposals for prospective application of changes in estimates in this project, which y'all just did, does the board believe governments should apply the change to all satisfied performance obligations in the year of the change, which is what we're calling the catch-up method, or both satisfied and unsatisfied performance obligations in current and future periods, which is we've referred to as the spreading method. We recommend that the effects of the change should be applied to performance obligations that have been satisfied in current and previous periods, the catch-up method, so that revenue and expense is reflective of the amounts attributable to those performance obligations. And I'll turn it over again to Marissa.
Task force members who provided feedback generally agreed with the project staff recommendation. One task force member disagreed with the project staff recommendation due to the volatility that they believe could result from the catch-up method. And although the scope of the project does not include presentation, this member suggested the board consider addressing effects of this potential volatility through presentation.
Thanks, Pam and Marissa. Lisa.
So I was to the task force recommend or feedback. I was also sensitive to the volatility, but I think the example really helped me to kind of get through and realize that I think that the catch-up method is the better way to represent the amount that's actually should be recognized and related to what's actually been accomplished. So I really appreciated the example, and I agree with the staff recommendation.
Thanks, Lisa. Carolyn, then Jackie.
I slightly disagree with the recommendation. I agree with the analysis that was presented in the paper. I agree that the catch-up is the more representative of the facts, but I'm just not sure that let me see what I wrote down, that the precise better allocation is worth it's worth sacrificing the ease of the spreading method and the familiarity that our stakeholders are with that method. When I was reading through the paper and came to the example, I immediately went to, well, this is how I would allocate it. And then when I read further, I was like, oh, okay, well, that makes sense. But once again, I'm just not sure that the little bit of education that might have to happen to get stakeholders there, the possible technical inquiries that might come in are worth it. So for right now, I'm going to say I slightly disagree.
Thanks, Carolyn. Jackie.
I agree with the staff recommendation on the catch-up method. I don't really see these kinds of revenue and expense transactions as the same as capital asset transaction when we're looking at the useful life of the depreciable asset. So from that perspective alone, I had an issue with using the spread method rather than the catch-up method. I think that the catch-up method is a better reflection of the actual revenue assignment to the appropriate period. And I think that from a user perspective, and this is true of the expense and the revenue, from a user perspective, for me, the bottom line on the operating statement being more representative of what actually has happened in the periods is more important to me. So I think it's a more reliable method, the catch-up method, than using the other method for that reason, in that it's better giving me a representation of the actual activity for the period as it happens. It's going to cause some unevenness and volatility with that, but it's not going to be happening that many times. And I don't believe that for most of the situations that it's going to take them that long to decide whether or not they're going to be able to redo the allocation. There are going to be different points where they're going to be able to do that. The fact that they've been allocating a portion of the binding arrangement already, they've already got a method for going back and redoing it. So it will be a little more work, but I don't think it's going to be that much more difficult for them to do since they've already got a basis for making that allocation. And like I said, as a user, it's better information for me on what the actual bottom line is going to be to reflect that transaction. So I agreed with the staff recommendation.
Thanks, Jackie. Chris.
I agree with the recommendation, and I do feel that the catch-up method just better reflects the actual financial position as of that point in time. We're not taking a piece of it and spreading it forward. And so to the point or the question about any additional efforts, whether you consider them minimal or, a little bit more substantial, I think it's absolutely needed in order to reflect where the organization is accurately and appropriately. So I agree with the recommendation.
Thanks, Chris. Diane.
I also agree with the staff recommendation. I think that by doing the catch-up method, it gets back to that faithful representation of the economic activity. And it may, like Jackie was talking about, it may create this spike for 1 year, but overall, it's a better representation. So I think the catch-up method is definitely the way to go.
Thanks, Diane. Robert?
I also agree with the staff recommendation, recognizing that there could be volatility in terms of you have that 1 year where you have this higher amount, but you get the remaining amounts correct in the right periods at that point. And that the spreading method doesn't appear consistent with the fundamental recognition and measurement tentative decisions that have been made to date. And for what it's worth, it seems more consistent with FASB topic 606 as well. So not that it matters for us, but
Thanks, Robert. I agree with the staff recommendation. The volatility part, I guess, doesn't concern me a lot, or the faithful representation. Those second 2 years just seem really off. I do kind of struggle a little bit that how is it that different than capital assets? And at one point I was kind of where Jack was, these are just different. And the more I thought about it, I'm like, it's really not that different, but it's almost like two wrongs don't make a right or whatever. Like this is, as I think about these kinds of transactions, this makes the most sense. I would rather revenue and our example years 4 and 5 be accurate than I would somehow making them not be accurate. It's hard to say that the change in estimate made the past wrong. It just made the past didn't work out the way we thought it would. And so we've got to deal with it. And how's the best way to deal with it? Is the best way to deal with it to make all 3 years wrong or to make just this 1 year really, really kind of weirdly wrong because we're catching up. And then the remaining years are now as accurate as they could be. And that seemed like a better answer to me than the alternative. Jackie.
So I'm not entirely sure that I agree with 42 either the way they did it, but I can justify that a little better because I've got a long-lived asset that maybe 20 years or 10 years, and there's no way I'm going to be able to get that right. And then go back for 10, maybe it's 7 years in and I'm going back to the past 7 years. So I can justify that maybe a little bit better than this one, where I'm basically just talking about an operating statement here. I'm just talking about revenues and expenses here. Yeah, maybe I've got a receivable or a payable on there for short term, but it's not going to be the same. So that kind of a catch-up's not the same, I don't think, as for a capital asset. But I agree with you. I'm not quite sure that I think 42's got it right either. But I wasn't around for that one. So may
We're not one we're revisiting.
And the thing with the volatility is they can explain that. That's what the MD&A there is for. So I'm not concerned about the volatility either.
Mm-hmm. Thank you, Jack. Now I can at least rest a little easier. You've given me some things to feel better about why capital assets are different, which was where I was originally, and then I talked myself out of it, and now you've got me a little closer back. So thank you. Mm-hmm. Appreciate that.
Joel.
Robert.
I don't think it's wrong in year 3. It's just you have new information and they made the determination that it's probable that you're going to achieve the bonus. So that doesn't mean it's wrong. It just means, and then I get to, I want years 4 and 5 to be more right than more reflective of exactly.
That's better word. I was trying to get to those kinds of words and not say it was wrong. I tried to say that. I tried to backtrack a little bit, but more right. I don't know. But yes, I agree with you, Robert. Thank you. Anything else on question 2? All right. Back to you, Pam.
So the paper then addresses estimates related to collectability and refundability. The board has tentatively decided that revenue should be recognized net of uncollectible amounts and refunds consistent with existing guidance, and that probable should remain the threshold for recognizing an allowance for uncollectible amounts or a refund liability. Project staff believes collectability and refundability generally are assessed at a portfolio level. Historical experience with similar customers and transactions often provides a more reliable estimate than an assessment at the individual customer, transaction, or binding arrangement level. As a result, changes in estimates related to collectability and refundability generally would not need to be associated with individual transactions or performance obligations. Instead, those estimates would be reassessed each reporting period and would directly affect revenue in that period without consideration of catch-up provisions or any other related adjustments. Project staff therefore recommends that collectability and refundability be identified broadly as measurement items rather than components of an individual total binding arrangement amount, and that changes in those estimates be treated as changes in accounting estimates without further application guidance. So with that, I will pose question 3. Does the board believe that collectability and refundability should be first, identified as components of measurement as opposed to components of the total binding arrangement amount? And secondly, changes in estimates for collectability and refundability be identified as changes in estimates without further clarifications? And we recommend this approach. And I think Marissa has. Go ahead.
Task force members who provided feedback for this question generally agreed with the project staff recommendation.
Thanks, Pam and Marissa. Remember thoughts on question 3? Jackie.
I agreed with the staff recommendation on this. I actually never saw collectability and refundability as part of the binding arrangement. I've always seen it more as a component of measurement. It's, to me, the whole idea of collectability and refundability relates to new knowledge or inputs that you've got that causes you to change your estimate or come up with an estimate that Paulina's here, but I'm still going to use the word, that change the value of the receivable or the payable on your financial statement. So from my perspective, it's always just been a change in estimate, which is a measurement issue. So yeah, I totally agree with you.
Thanks, Jackie. Lisa.
I also agree. It seems to me that it is a component of measurement, and for all the reasons that Jackie stated, I agree with the staff recommendation.
Thanks, Lisa. Diane.
I agree with staff recommendation. I think it definitely needs to be a component of measurement. I like the portfolio approach. Some of these you just can't get into every transaction. So I think this all makes sense.
Thanks, Diane. Chris.
I also agree, and it goes back to our conversation with I think it was the first paper around finding ways to simplify and help make this these newer ways to think about things be more digestible, and taking this approach does help with that. So I agree.
Thanks, Chris. Robert.
I agree with staff recommendation. I mean, it appears that obviously the components of measurement are better assessed to groups or portfolios of transactions rather than individual binding arrangements, and that any changes in collectability or refundability would be identified as a change in estimate without specific application guidance.
Thanks, Robert. Carolyn.
And I agree with staff recommendation.
Thanks, Carolyn. So overall, I agree these are parts of measurement, right? It becomes how do we incorporate them into this project and the guidance as parts of measurement. For collectability, totally on board. Agree, understand, doesn't make sense to be part of the binding arrangement. That will make sense. I worry a little about refundability only to the extent that in prior decisions, we've talked about things like rebates as being components of the total binding arrangement amount and spreading them accordingly. What's the difference between a refund and a rebate? Are we going to describe that in the guidance, and we're going to treat one, and knowing that labels aren't always accurate? And so are we going to treat rebates or whatever we think a rebate is, because we're going to use the word rebate, or at least thus far in the project, we use the word rebate and said it's part of the total binding arrangement amount, but refunds you're going to do differently. When we put this all together, I worry that's not going to make a lot of sense. I think collectability is its own thing. I think it's separate. It's fine. I worry about this refundability, and I'm not necessarily opposed to it being this way. I understand the portfolio kind of aspect to it, but then why doesn't that apply to rebates? Why doesn't that apply to discounts? And, at what point do we trade one for the other? And I guess my ask is that when we put it back all together and we kind of bring it back, that we kind of keep a tab on that one, a little Post-it note to kind of look at, is there a better way to do one or either of these kinds of things? Robert.
I'm just wanting to make sure I understand. Is it because it's more individual transaction focused, or, I think we've talked about refunds and rebates in a portfolio approach. You're not looking at individual, you're looking at more of a grouping and a total.
I think it depends.
Okay.
I think I kind of agree with you, but in our TBDs, we currently have rebates in part of the total binding arrangement, and now we're said refunds are different. So we're going to treat rebates and refunds separately. Do you think rebates are individual, they are different than refunds?
I guess I consider a refund as something, a rebate is a decision that you're making. You make a conscious decision to return a portion of the revenue to a customer, versus a refund is something where the customer or the other party is requesting it, or it's part of a legal action or something like that. And I'm having trouble wrapping my arms around that.
Jackie's waving her hand. She's
So
trying to help.
I agree with Robert. I see a rebate as part of the contractual arrangement at the initiation, whereas a refund is something that happens after the fact most of the time, that has caused the vendor or whoever it is to say, okay, you get your money back. I think of even, I can just do it for colleges and universities. So the refund might be related to a student scholarship, but the rebate may be related to a scholarship kind of thing. We're giving you a discount on it. Whereas the refund is, if you drop out of school, you get your tuition back. So it's an after the fact thing. It's not part of the original contractual arrangement kind of a deal. To me, that's the difference between the two.
Yeah, a rebate may be something that we contemplated upon the initial contractual
210 net 30.
Exactly. Versus a refund as something that occurs after, based on some specified action, whether it's via policy of the government, or whether it's something where there's some sort of legal claim that's asserted against the government by the other party.
Yeah, it didn't work when I got it.
So I think part of what Joel's saying is just see if it fits when we put it together. Because I'll give you an example where over the last couple of years, states, especially because they've had excess income tax collections, right? You've got normal personal income tax refunds. And because I collected too much state income tax, I decided to give rebates to income taxpayers. So what made one a refund and one a rebate? To get that rebate, you had to have submitted a tax return and gotten a refund. So that's just an example where maybe those two words are being used. To his point, it's a label, and when you filed your taxes, you got a refund, but then because we collected too much income tax, we gave you a rebate. Like, I'm just saying that might be an example where the words might not be as clear cut as maybe we're getting at, and then why make the distinction, which I think is all what Joel's saying.
And I agree that people use words indiscriminately. We've already encountered that numerous times in this project, where the same thing can have multiple words. The word grant, for example, is an excellent example of what that we're talking about there. It can mean like 90 different things.
And so I mean, Roberts, that kind of helps me a little bit. And hopefully it helps you because in the end, if we're going to distinguish these things and treat them differently within the methodology, something other than labels has to be the description of what the things are that makes them different. And if one is something you considered is going to somehow be described as something you considered at the time of the binding arrangement, even though refundability was written into your binding arrangement, so it was considered, but you didn't necessarily, you don't have a history. I don't know. I can talk. I start talking myself out of it a little bit, but Pam, maybe you can help.
I just think I recall when we first started talking about measurement and when we introduced the whole component and started the deliberations, we talked about variable consideration and all of the different types of variable consideration, all of the different labels that you can run into that sometimes mean this over here and sometimes mean that over there. And I think that Joel's comment, what it makes the team think about and me think about is are we starting to approach, hopefully the end of the measurement type deliberations, and we do, as we've done in the other components, a real wrap up, relook at all the pieces that the board has come up with in terms of the component. Do they all really fit together? How do they work? Is there something that that needs to be kind of tweaked or modified? And I think we're starting to wonder about portfolio in that way. Where does this really fit? Where does it not fit? And I think what Joel's kind of highlighted to me is that by calling out specific things, collectability and refunds, I think it deserves, maybe a relook as to whether that's really, is there something else that goes there in there? Are we going to define all these things? How do we want to approach portfolios as kind of a broader concept? And so I think that that's a really good direction to give us is as we work through that wrap up type, we'll have, a paper and discussion about that at some point in the next few meetings, hopefully. Where does the idea of a portfolio fit in a broad sense, and how specific does the board want to get in terms of saying where it fits and where it does not fit?
Thank you, Pam. And I appreciate the discussion. And I mean, count me in for agreeing here, but I appreciate the way you just described, kind of relooking at it. Maybe in the end, we do have to kind of describe what these are, and what Robert and Jackie have talked about is the beginnings of what that is and how they looked at it differently. But do we need to do all that? Is there a better way? As you talked about, portfolios kind of coming in and out. They've always kind of been over there and we can use them, but how does it play into it when we put it all together? I appreciate that kind of that holistic look and the way you bring that at some point, back thoughtfully within the team, but then also back to us at some point too. So I appreciate that. All right. That was it. Yeah.
Yeah, I think that's all we have for you today. And we're working on a few more measurement topics for the next meeting. And so, yeah, that's all we have for today. Thank you very much.
Thank you, Pam and team. Let's take 10, maybe 12 minutes. We'll go to like 9:40. Allow a team transition before we go to the next topic, which is infrastructure. Yeah.
Yes.
Infrastructure.
Yes. I had to think from that.
9:40, we'll be back. Okay, welcome back. We are moving on to our next topic, which is infrastructure assets. Got a lot of great comments on our exposure draft that we had on the street. Had a lot of great public forums too. But we're here today, Joe, I think, to go over kind of the comment letters a bit. And so I'll just turn it to you to walk us through it.
Yeah, thank you, Mr. Chair. So again, as Joel just noted, just a pretty brief topic this month, which is that summary of the comment letter feedback. Again, we had 81 comment letters in response to the exposure draft that the board had approved back in March, which are all available publicly online. Comment period for that closed back at the end of June, but as Joel mentioned, in addition to that, We also held 3 public forums this summer where we received a lot of great feedback from auditors, preparers, and users of financial statements. And so project staff's very appreciative of all of this feedback that we've received. And then again, for the participants who generously provided their time to us for those forums. Some themes noted in the feedback from respondents to the exposure draft. Some positives. Generally, there is an appreciation for the board's goals of improving transparency for information related to infrastructure assets, specifically with regard to more insight into the composition of a government's infrastructure assets through presenting them by network rather than treating them as a single consolidated major class, and as well as more information about the age of older infrastructure assets, along with the elevation of the guidance to periodically review the estimated useful lives that governments use to age those assets. However, we also have some feedback on various topics that we will be returning to discuss in more detail later this year. Feedback related to definitions and scope, including requests for examples and more insight to networks and parts of that, including components and assets. Feedback related to the application of periodic reviews of estimated useful lives. Feedback related to identifying and appreciating significant components of infrastructure assets, note disclosures, and then cost benefit considerations. So the summary is pretty much the extent of what we have for the board this month due to the proximity of the board mailer timing with the public forums that we were holding last month. We will be returning in September to discuss proposed guidance related to definitions in paragraphs 4 and 5, as well as the various proposals in the exposure draft related to the modified approach. For example, continuing to allow it as an option for recognizing and measuring infrastructure, the amendments for the requirements to be able to use it, amendments to the RSI presentations that are already required by Statement 34 to go from 5 years to 10, and to disclose changes in the condition the governments intend to preserve those assets and why. And then as well as the rescission of some items, including the description of the modified approach and a summary of significant accounting policies for governments that use the modified approach, and encouragement for governments to provide modified approach RSI as supplementary information if they have the ability to do so. So again, due to the timing of the forums with the board mailer, we don't have any formal discussion questions for the board today, but before we wrap, the project staff would like to turn it over to the board for any questions or any comments that they may have that'd be beneficial for the project staff to be considering as we dive into these topics later this fall.
Thanks, Joe. Diane.
Joe, I was just curious that the comment summary that you gave us, does that include anything from the public forums? And at some point, will you incorporate that? Or how do we get anything that tells us this is kind of a summary? Now, I realize a lot of them had comment letters, so that would be incorporated. But what about those that didn't?
Yep, that's a great question. And so some you receive will be from the comment letters, but absolutely as the project staff comes back this fall, as we talk through feedback that we've received in response to the exposure draft, we will be considering the feedback that we heard from stakeholders at the public forums. Because to your point, some of them did provide us comment letter feedback. It wasn't required for participation in the public forum, but even for those that did provide us comment letters, a lot of them, we had some pretty good discussions these 3 sessions this summer, and some of them provided some feedback and a little bit more context above and beyond what was in their original comment letter. So that is absolutely something that we consider as we work through these topics.
So it won't ever appear as part of the summary of the comment letters, and this is just the letters.
Correct.
Thanks, Diane. Anything else? Lisa.
Not really, just a comment. I just wanted to say that I thought the public forums were really, really well done, excellent, and just the participation of the people that were there as well, just so informative, and I really appreciate how well organized that they were.
Thanks, Lisa. Jackie.
I want to echo Lisa's comments. I really thought the forums were great. And I particularly like the fact that we had some different kinds of people involved in the forum, different users in the forum that we had not seen in forums before. And I thought that was so helpful to get their perspective. So kudos to the team that convinced those people to come to the forum.
Thanks, Jackie. You mean they all weren't chomping at the bit trying to? Some of them were, but
Some of them are, I realize, but no, not all of them, I'm
maybe
sure.
not all. Carolyn.
No specific question. I just want to echo what Jackie and Lisa have shared. It was a really good group that was pulled together to give us feedback, different perspectives, different actors in some cases. So kudos on putting that together.
Thanks, Carolyn. Joe, I appreciate that kind of, to me, you've kind of organized almost how the topics will come back to us, right? You organize the comment letters like that, and the organization you described sounds great to me. Like it follows logically and seems to address all the main topics. So that sounds great. 81 comment letters is a good number for us. And if you look at it, we had 46 from preparers, 18 from auditors, 15 from users, and 2 from kind of practitioner consultants. It's a pretty good mix. We heard a lot of good stuff. I'll echo the public forum comments. I thought they were great. We had, in the end, 23, I think, participants, pretty evenly spread among users, preparers, and auditors. I think we heard in those forums and in the comment letters a lot of passion for this project on kind of all sides, and I think that speaks to the significance of this project. And I look forward to us, continuing on to bring all that feedback into our thoughts and proposals and moving it forward, because I think it's an important project, and all our projects are important, but certainly the expression from our stakeholders shows that they care about this project on all sides. So I look forward to all the discussions. And I thank all the people that care about this and that have participated in the process. Really appreciate the comment letters, appreciate them participating in the public forum. We're a scary group. That's what, people are scared that we're so scary, right? But we try to make it fun and entertaining. Anybody that has not watched the public forums, but somehow watches board meetings, but not public forums, I would encourage you to go watch the recordings of those public forums. They're really interesting discussions and perspectives and feedback. And maybe you'd like to participate in one when we have one in the future. So anyway, all right. That's it. We'll see you next board meeting then with the topics you discussed earlier, Joe.
Yep. We'll see you then. Thank you so much.
Thank you. Okay. Moving expeditiously, which is good. Next and last topic is our voluntary digital financial reporting project. Give us 5 minutes or 10 minutes? 5 minutes? 5 minutes. So 5 minutes or so to change the teams out. All right, welcome back. We are on to our last topic for the board meeting. Very exciting and different project, not standard setting, but our technology project, the voluntary digital financial reporting project. Paulina, I will turn it over to you to walk us through what we have, which is most of a discussion memorandum related to the progress on the project.
Good morning, everyone, and thank you for your time and your feedback. So as you saw in the cover memo, we're preparing to put forward a discussion memorandum with the structure of the taxonomy proposals. As we have discussed multiple times with you, the major issue where we are in right now is just trying to ensure that the foundation of the taxonomy design is going to hold as appropriate, doesn't have concerns, doesn't have objections. So therefore, we can then start building out the line items, which is what most people find exciting and relatable because it's what they're used to reporting. So the infrastructure underneath it is kind of boring to most people, but for us, it's a very fundamental piece that we want to feedback. I think from a due process perspective, as Joel alluded, this is not a standard setting process. And so probably one of the hardest documents that I have led a team to develop is trying to find the right voice and balance So any feedback, suggestions, it would be greatly appreciated to improve the clarity, the visuals. Do you think it's missing anything? Do you think there's more materials that you need? Do you think there's too much material somewhere? Happy to continue to adjust. And at the conclusion of the discussions, we'll let you know what are next steps that are planned to get this document moving forward. So I'm going to go broadly chapter by chapter again, because it's not a standard setting issue. I am not going to kill you on a paragraph by paragraph basis. But if you have any input broadly or in specific paragraphs, just please let us know. Like I said, happy to continue iterating. So the first chapter, the intention is, I think chapter 1 and 2 generally, let me take a step back, was intended to address not only what are we doing with the project, but especially as you get to chapter 2, what you get is to a lot of the issues that our stakeholders have raised, as we were even discussing with DCG, with stakeholder outreach, with a broader conversation. So in the first chapter, what we were attempting to do is, what are we doing? A taxonomy is limited to GASB gap. It's not extensible beyond that. And not only that, but for the scope of this very first phase of the taxonomy development, we're not even taking the entire ACFR as a whole. We're taking MD&A, financial statements, and notes. So just trying to provide a lot of clarity on how far we're going with it. The pictures and illustrations are associated with that, and it also provides you an introduction that not only the DM is available to you, but you have 2 accompanying documents. An XBRL taxonomy, which unless you have an XBRL viewer, you're not going to be worried about it. And unless you know what you're looking at, you probably can't care about it. But we have an accompanying Excel spreadsheet that is intended to help and prepare an auditor and a user to look at the structure and go, oh, I can see how those boxes fall together. And based on the explanations that you have in every chapter, you should be able to understand the diagrams. We put out that the questions to respondents can be filled out in part, trying to make sure that, anything that you provide us is great, and that is going to be in every chapter. That, in a nutshell, is chapter 1. Any suggestions, additions, deletions, or helps for improvement?
Lisa.
Thank you. Really like the document, and I've been very interested in this project for a long time. I have a couple of comments, and I don't want to miss any, so I'll just look at my notes. So I thought that I think users will be very interested in this project, and I thought that this jumped in maybe a little too technical to start and could benefit from kind of stepping back as to what, how this project has evolved. So yeah, and really grab people so they understand what it is that you're actually doing here and why you're doing it, versus talking about developing the taxonomy specifically. And it maybe is just a paragraph. My bad, but I would move the glossary maybe a little bit further up front for users. I know that you have a footnote there, and I know that on the memorandum, but I didn't read the memorandum with the attachment together, so I missed that it was the glossary was in the back. And so for people like me that are trying to go through it, maybe just because the terms aren't really well understood, maybe putting that up front. So then just specifically on paragraph 7, I thought that the paragraph was a little dense and had a lot of really important information in it. And like you broke up paragraph 6, I might break up paragraph 7 as well. And I might also connect it to figure 1 so that if you have got, if you label something A there, you can see on figure 1 that it's referring to that. And then even though you did, I know that this is supposed to be very generic and applied to all different softwares, I would just make sure that it doesn't read as if it is particular to one particular software platform. I know it says it, but a platform being mentioned several times just makes it feel like it's related to that platform only. So maybe just try to figure out a way to kind of lift it up a little bit so it's not so specific.
Thanks, Lisa. Robert.
I also agree. I didn't have any specific comments prior to the meeting, but I wanted to hear that your comment. Lisa's comments have kind of prompted me. I would agree. I think if you broke paragraph 7 up and move the figure up, that will improve it. I also just noticed that you have a reference to a paragraph 10, which doesn't exist in paragraph 8. So, and I think that moving paragraph 8 after the table then flows better, maybe down into the technology subsection as well. Because then also, and again, I think a couple of us have had sidebar conversations about XBRL being the only versus you talk about in 11 about that being it, but if 8's introducing or again, looking at this from someone who has no idea what they're doing, which might be me, XBRL, there you go, what's that? And you may need, I'd actually put that in the glossary as well.
XBRL is a term.
Yeah. Mm-hmm. Thank you.
Thanks, Robert. Anybody else? So, Paulina, I provided you some editorial stuff and thoughts. I'm not going to get into those, but a couple of broader topics that may or may not be chapter 1 related, right? But it's a little bit related to kind of sorted to something, both of them kind of sorted to something Robert and Lisa are talking about. One is, I think throughout the document, we kind of talk about the attachments, whatever these attachments are, as being, there's some that are XBRL related or very technical. And then there's an Excel spreadsheet that is maybe for the other people. I think that somewhere, maybe likely in chapter 1, we should really kind of name those so that they're specifically, anytime we reference them, we know it's that formal name, and it would equate to whatever that attached document would be named as somebody was downloading it or whatever. And then maybe describe in summary form what each is and the audience it's trying to reach and how they might kind of look at it. I think that in particular, what that will do was the techie people, which I know is a technical term, but that's what I use as best I could do, are going to kind of know what to do probably with the whatever the techie attachment is. Everybody else is going to go, what is it? And if we tell them from the front end, this isn't for you, then they'll know this isn't for me. I'm not going to use it. I can, however, use this Excel spreadsheet. And now you've told me a little bit how to use it. And because we reference back to those documents kind of throughout, I think that will help. I don't know the exact right place for it, but it's probably pretty early. The other thing is, and I don't know the right place for this, but we have, well, I mean, from the beginning, we've talked about this being technology solution agnostic, which is something that Lisa and Robert were getting at. But even more than that, as time has passed, we've grown to look at it as, I don't want to say 2 separate projects because they're interrelated, but there's almost 2 paths of this project. One being the current state, we're using XBRL to document it, prepare driven, something I've got to do to help preparers, for lack of a better term, tag or digitize their financial information using techie stuff and language, et cetera. It needs this data structure and the documentation and descriptions and all that stuff as part of that project. But separate from that data structure, documentation, descriptions, extraction, normalization is a term I think I've heard you use, is its own. It informs the broader project, the broader big techie project. But in a future world, that might just be the only product of this project that stands as AI has come to our users. And I really kind of view that as an AI agent training tool that will create more reliable information for users as they develop their own using AI extraction tools. they can now, instead of building it their own and training their own, training their own AI agent with all the things that it needs to know about the gap ACFR, they can just say, hey, go look at that GASB taxonomy AI agent. And now you learn, you have a gap structure, or you have a structure, you understand these statements better, you know all the things to look for. The output should be that much more reliable and use gap and be structured in a way that we would structure it. And I think that's really important. And I think the idea that those two, I hate to keep calling them two different projects because they're related, they're not separate, but they are two different outcomes in the end, even though one informs the other. I think acknowledging that somehow as a paragraph in here and kind of saying this document is really more about the techie part and the structure of it. There's some line item stuff, there's some structure in it that you could look at in the Excel spreadsheet, for example, but this other project that we're kind of working on, or the second part of it, it is really a lot yet to come, and will come later for you to address there. But I think so many people are going to look at this and say, you're just doing XBRL, or you're just doing this technical part. What about AI? What about all these things? I think we should acknowledge that we understand that, and that's something we're thinking about, even though this document isn't really directed at that. It's more the techie part. So a paragraph or two summarizing that at some point in here, I think would be helpful. Lisa.
Joel, I couldn't agree more. I think that's actually what is going to resonate the most, I think, with many people in the municipal community is our users, and more so users and preparers, but users mainly, to understand that you are working on something that is going to be it's going to have a long life, right? It can move with technology. And I think since it does inform, right, you're already kind of figuring out all of those elements as you're designing the XBRL part, talking about that fundamental part of it, and that can be kind of stripped away from, the more detailed version of using XBRL, I think will be really well received.
So thank you for the feedback. I think having had the advantage of a lot of your comments ahead, we're already crafting a lot of that, so very appreciated. I think definitely the Excel and stuff, I think is a chapter 1 issue, particularly in the question section to orient people how to do. We're crafting a lot of the materials that you're describing as 2 tracks of technology. And I think one thing that I would just want to be certain you're comfortable with is we are developing an XBRL taxonomy. That is what it's been exposed. So I didn't want to hedge about that. That is what we have in here and being exposed in an XBRL format. But it's also, as you alluded, that project, as you're aware, is informing a second project. It's right now 2 separate projects just because of the logistics of how we're working it out. But they're very complementary projects that are very intertwined. And trying to highlight that I'm 100% comfortable. I have no problems. We will be, the next iteration you'll see will have materials around that. I just wanted to make sure that for the pieces that are XBRL, we don't shy away from saying what it is. It is what it is. But we're not ignoring the second part. We're not ignoring the other pieces. We have been in presentations and conference and large stakeholder discussions where you present this thing and the chat just explodes. And who needs that? Because in the era of AI. So that is a very prevalent question, not in the user community, in every community. And so it's just a very important issue that I agree 100%. I understand we need to address in the document, and hopefully as our projects evolve and get mature, happy to start talking about how they work and how do we expose it and things of that nature. But just want to make sure that it's okay to keep saying XBRL because that is what we're doing right now.
I think that's fair. I think that using that technology to kind of as a proof of concept, right? Like, can you actually, take the financial reports and put them in a way that is both reflective of GAAP as well as allows for use the way that users use the financial statements is really important. I just think it's also important, as you stated, to let people know that we are moving forward with looking at this from a more maybe more current or future looking technology as well.
Thank you. And definitely the introduction, we will do something about the history and background context.
Jackie?
I definitely am supportive of continuing to make sure that they understand that this is an XBRL or relates to XBRL. I agree that the future is going to be different and very likely will not include XBRL, but right now it does include XBRL. And given the fact that our neighbor down the down the hall has XBRL and uses XBRL, I think it's important that people be aware that we do have something. This is growing out of XBRL, and we are forward looking. This will not die with XBRL.
And maybe it's couched in, this is XBRL because that's the existing technology to use to document it. That's the current and historical way that financial reporting has been presented in this way. So we're developing it. And then we got this future AI enabled extraction normalization. And maybe that's enough, but I maybe consider, is there an in-between that says that there might be other languages or other technology uses that a preparer that might eventuate, that a preparer could use to digitize their information that isn't XBRL, but also isn't a totally reliant on AI agent training tool. So but because we're developing that, it can always fit into different technology tools or languages, but we're using XBRL because that's the one that exists now and is used. And so maybe all of that maybe fits into how we describe that. Just think about that.
We'll work on it. It's probably the harder paragraph or two that we got to put together to not just, be all AI and all out there, but also the potential of other evolutions. But I think it's important to highlight how complementary we're looking at them. It's not it's not a competing technology problem. Everything that we're doing in here is informing here, and everything in here is informing here. So that's what Joel describes them as not separate projects. It's just the virtue of how they're being built. They're separate, but they're so intertwined in terms of development. It's not feasible to separate. But at what point, at the point of maturity of that second track, I think we would be able to share some of our findings and how did it improve. I mean, we have had private TCG conversations about, oh, how are you doing? Oh, we're doing this way, we're doing that way. So people are really excited about how to use what we're building for the next thing. So it's not certainly going to resonate with an awful lot of people to explain that we are exploring the alternative thing. And I think from a preparer perspective, should answer the question, why are we doing this? Is AI going to solve everything? Well, we don't know that just yet. But in the meantime, we're also keeping an eye on that.
But it also explains it to somebody who says, well, isn't AI going to fix all that? Well, not by itself, right? This other part, the second track, this whatever, is still fundamental to create reliable information for the market or whatever user to use, for an AI tool to use and be reliable and consistent. That part of this project is vital even in that state. And I think the description will hopefully show that, right? Lisa.
Sorry. I was just thinking that what you're actually creating, even though you have two different implementation tracks, is the manual of how do you take a GAAP financial statement and convert it into something that is understandable in the electronic world. And then whether you use XBRL, AI, some other type of technology, you can use that logic to move forward.
Thanks, Lisa. Anything else on chapter one or broad? We can a little beyond chapter one, but
We're still in chapter 1.
yeah. All right. Chapter
Great,
two.
thank you. So in chapter 2, like I mentioned in the very beginning, the vast majority of this chapter was intended to be, and if you think some pieces of this actually belong to one, like we had to start by thinking, how do we tell people what is a taxonomy? It's the hardest part. Every time I have to stand in front of a group of people to make a presentation, it's like taxonomy, dear Lord, what am I going to say? And so we have tried multiple versions, we have tried analogies, we have tried pictures. So it was our intent that if a stakeholder who has never heard us talk about the taxonomy, what do we do? And to me, this is a hard location. I don't know if this is the right placement or if this also goes up after your introduction, what's a taxonomy? And then we launch. If that's a thought, happy to hear it. But what we were trying to address is from the beginning, where are we? What is the role? What is it supposed to do? It's really interesting to even intake, as you see the team keeps growing. As we intake new members into the team, the question keeps being from a prepare perspective. So how does this affect me? What is it going to change for me? Do I need you heard this all the time. Do we need an ERP? Do we need blah, blah, blah? So just trying to address those very fundamental questions. Robert, it resonates very much that you said, well, I don't even know where to start. Those are the kind of things that we were trying to see we can resolve some of the questions. Why machine readable? What is important about it? How does it function? So it was trying to provide a lot of those high level issues, including the industry concerns. We've heard at the very beginning, there was an industry concern of, oh my God, you're going to need at least 20 taxonomies for every industry. And no, statement 34 kind of solves the problem. But yes, as we keep permutating, the modules got very extensive to address every special purpose government type. And it was really interesting to work through. So it was just sharing some of those stakeholder concerns that at the very beginning we saw and heard. Any feedback is greatly appreciated.
Chris.
Pauline, I'm gonna jump on your recommendation and follow up with Lisa's comment. I think that really was a good comment around more plain language up at the top of the document. And even as far as this is chapter 2, but can we consider putting that, like, taxonomy is so fundamental to what we're talking about in the very objective, right? So to put that up in the front so that people understand, and that roadmap, to Lisa's point, not to rehash just for the sake of rehashing, but to help people understand, to the point that you just made, that what we are trying to do here is to take a very paper world, and PDF, we consider that paper, right? Like, we take a very paper world and we're trying to translate it over into this new electronic world to allow you to do all types of cool things with it, but it to keep its underlying bones or structure or whatever we want to call it, right? And I think that's so important for people to understand. And then once they're settled, right, and once they understand and have that mindset, now they're able to dive deeper into the XBRL and the AI and the whatever else and the different modes that we might go about doing it. But just orienting them to say, this is what we're trying to capture here. And taxonomy, it might be oh, what does that mean? Right? No, like, this is very, very simple. We're talking about paper to electronic, but very different than, and Brian used to talk about it so much, right? The electronic is not the PDF, because that's how we've been thinking.
Digital paper,
right?
To digital.
Yes, it's digital paper, right? So I just, that's my only comment. And then that allows all of these other things to be received more easily and understandably.
Thanks, Chris. Jackie.
One, I really like the analogy you used to help explain a taxonomy. I thought that was great. I thought people will get that. They'll understand that. So I appreciated that. But I kind of agree with Chris that if you've got people that don't even understand the term taxonomy, which I totally didn't when I started working with this, it took me several readings of different kinds of things to come up with a comfortable feel for what the concept of a taxonomy was, because different people look at it even differently, depending upon whether you're talking to an information systems person or a computer science person. They look at this differently. So putting closer to the front, maybe even in the introduction, what we mean by a taxonomy and what we're looking at in developing this, so that people are all on the same page when they go through the introduction, might not be a bad idea. I think that might be a good idea. I was comfortable with it the way it was, but I'm probably not the right person for this. So,
But
yeah.
I said it, right? So
Yeah.
now it makes you think about it.
Yep.
Thanks, Jackie. Lisa.
I agree with Jackie and Chris on it maybe moving that up. But I had some more specific comments on the chapter. The first was when you're describing what a taxonomy is, I felt when I was reading it that you were going from trying to be general to being GASB specific. And I found that a little confusing. And so if this is meant to describe what a taxonomy is, maybe keep it at what a taxonomy is without introducing things like codification and, it just got really technical much more quickly than I think maybe is necessary for trying to explain what a taxonomy is. I also think that introducing the codification, also explaining why that's even in here is, if you're just a general user, you're not going to understand even why that would be important. And so it's fine to have it in there. It's just whether or not, if there's a way that we can make it understood that that's referring back to something that gives the information meaning in the accounting world, that would be, I think, helpful. I really, really, really liked paragraph 6. I was like, okay, this is explaining what the project is doing. I might be careful with the words, and I have 2 comments on it. Words like timely, anything that suggests that this is going to improve timeliness, it's not going to improve the timeliness of the financial statements themselves, right? It's going to improve maybe the timeliness of the delivery in a machine, in an extractable way, in a usable way, but it doesn't improve timeliness. And same thing with comparability. I think that there's perhaps a belief that doing this will enhance comparability of financial data, and it doesn't. It takes what exists today and puts it into an electronic form. And to the extent that, 2 governments aren't comparable today, this doesn't make them more comparable in the future. And yeah, I think that was maybe it. And that was in paragraph 11 on the comparability side.
Chris.
So I understand all of Lisa's comments, but Lisa, I would just point out that viewing comparability or comparability from the standpoint of now you have the opportunity to look across multiple governments, right? Your scope has increased tremendously. So it does allow you to do different things because you have access to this data on a grander scale. So I think that, while you're right on taking the electronic documents that you had before, and now you have this, it doesn't necessarily help you any more than, it's the same information either way, to your point. But I think there is a comparability piece that the team should highlight, and that it allows you to, especially when you're talking about big organizations that are looking across the states, it allows you to see so much of these different governments and how they interact.
Yeah, no, Chris, I hear you. I think for me, it's more of an efficiency issue, and an accessibility issue. You can grab a lot more information a lot more quickly. It doesn't mean that when you grab all of the numbers across cities, that those numbers mean the same thing, right? And so, because they have different, they have different responsibilities, they have different revenue streams. So I just don't want to suggest that this is improving the holistic comparability, because that's really what we struggle with as analysts in the municipal analytics, is that, you have to understand what you're looking at in order to be able to interpret financial statements. So anyway, I hear what you're saying. I just, from a user perspective, we would argue, I would argue doesn't make things more comparable. It makes my life a whole lot better. It just doesn't make the data more comparable.
And this is like where we are so often at this table, where words matter so much, and the way people receive words and understand words are important. So,
I My only comment, I guess one thing, did not provide you with this comment, but Lisa, I encountered it in this transition from what is a taxonomy broadly to a financial reporting taxonomy. It did feel a little like we switched gears a bit pretty quickly, but I wonder if it's as easy as the header for paragraph 2 is what is a taxonomy. If you just put another header but ahead of paragraph 3 that says what's a financial reporting taxonomy, or something like that, so that now we've shifted from a broad taxonomy to a financial reporting taxonomy. I think that would probably maybe help the transition a bit. Jackie?
Actually, if they just moved the general taxonomy definition into the introduction, it would take care of that.
That's true.
Because then
That's
we could
fine.
get into the more
Just
detail
be
in
in
chapter
financial
2.
reporting. That's true too. Depends on what you do with that.
So potential, yeah, I would agree. So potential solution would be to move 2 and 3 to the front and then leave 4, 5 and below with illustration, because the illustration is more applicable to the GASB taxonomy. And so we'll keep it that way so that people have at least a sense of orientation of what is a taxonomy. So I wanted to make a couple of comments. So regards to codification concern, it is defined in chapter 1 and is the guidance. I mean, we're just not saying statement 100, statement 34, because the purpose of the taxonomy is to function on top of a codification as opposed to the OPs. Is that something we should explain differently, go beyond? I mean, the board is in the middle of a due process approach to determine single, multiple, authoritative. That's what we didn't say anything about anything. We just started with the codification and moved on with life.
I took Lisa's comment to not be about whether it's OP or COD, but just why is COD relevant? Right.
What
No-
else would I reference? I kind of don't understand.
No, like
I'm
for a reader that, for a
confused.
user that doesn't even understand we have a COD.
I think that
A COD is our authoritative
I
guidance.
can't fix that in the
I
document.
think referencing the codification will make sense to the preparers and the auditors. It probably makes less sense to the users. I would probably leave it in for them,
Right.
understanding that the users are just gonna
Right.
okay, and keep going. But I have another comment that maybe would help a little bit. I don't know what you're planning for your visualization there, but I like that early on in the project, we used a tree a lot of times, right? And so if you have the tree, the roots of the tree are the standards, the codification, right? You put there, that's the root, that's the base of this taxonomy. And then the trunk is the act for itself, maybe the taxonomy itself, results in an act for, and then each first branch off the trunk of the tree is a statement or a note. And then within each statement, I've got decisions we're making about clusters, I think we call them, right? And so we break statement of net position as a main branch. And then off that branch is, I've got cash and investments, receivables, capital assets, whatever the branches are off that. And then within each of those, I might have more branches, or maybe I have leaves, with leaves being the ultimate data points. Just an idea for you to consider. I know we've used it before, but maybe it's a way to describe or show
I think
that.
it's the one that it resonates the most for a financial taxonomy. We have tinkered with a few pictures. We'll see in the next chapter.
And I would say, I mean, everyone can understand a tree,
Okay.
right? So I think that's a great way to kind of think about it.
Cool.
And I don't know that this changes, discussion kind of between Lisa and Chris, that I understand using the word comparability. To Lisa's point, we don't want to oversell. We want to manage expectations. At its core, it does not improve comparability in that way, because governments will still have all the same line items. And to the extent those aren't comparable today, they're not going to be comparable because you've implemented the taxonomy. But that structure that I just talked about, those branches will create more consistency that a user will have quickly, not that they create on their own. If they're using the taxonomy, the data as it comes in at a certain level will be more structured than it is now. And that does enhance comparability at a certain level more than the data presents now. So I think there is some comparability, not as Chris was talking about, but as you were talking about, there is some comparability improvements this will create, but you don't want to oversell it because it isn't changing the line item. So
Could you use the word consistency? It improves consistency because that's what it does, right?
consistency for us is kind of year to year. Comparability
Well.
is government to government.
That was the point, and I was kind of hesitant to raise it. The way we would use it was intended more from a conceptual standpoint than maybe how the users view consistency. And so, for example, the example that I love using it all the time is receivables. Some governments say receivable from the state, others say due from the state, others, some other generic words. If you have the same tag and people keep using the human tag the same, it doesn't fix anything. But the underlying data, now you know, oh, it's the same concept. And so it does provide an enhancement that I think it's not there in the just readable format. But if it misses the point, we can remove the word comparability or consistency and try to figure out if there's some other word to make it a little bit less.
Maybe it comes down to definitions, right? Maybe if you define what you mean by comparability, that could be helpful. Because if you pull, even if you get to the very fundamental level and you pull, the net revenue or net expenses of a particular government, right? They're going to be different depending on what obligations and what responsibilities and what they provide, whether or not a city has a school district within it or does, right? So those are the kinds of things where if you take the numbers at face value, right, and say they're comparable, they're not, right? You need to understand the credits, the issuers, what they do. But yeah, you're right. It's more, there's an enhanced comparability from the consistency of application and taking away from like the wording differences that are used across government. So I hear you. There is a real meaning among the analyst community of what comparability is. And again, maybe to Joel's point, you don't want to oversell that.
I think part of the problem for me when I think about this is, for me to really think about it and distinguish the two, I have to bring two words in the conversation I think are just going to confuse you more. What does it mean to normalize versus standardize? This thing does not standardize anything, right? Other than what's already in the literature. It normalizes stuff. And what we're kind of splitting hairs on is you can argue normalization has a little bit of increased comparability. Standardization would really be what you're talking about as comparability, which this does not standardize. This does not standardize across governments. But then to bring those two words in here, you brought two words that also going to have baggage, that also might not have context. And I think we're trying to avoid bringing those words in here.
Yeah, those words, absolutely agree with you. There will not be a path forward because
Right.
even the way we think of standardization is very different than the way the taxonomy world thinks of this. And so
Right.
they use this word persistently to mean something very different than we would.
Right.
And so.
But because we're trying to avoid those words, we end up with this comparability conversation because we don't want to use those words.
And maybe it is just defining what comparability means for this document.
I couldn't do that either. It's a concept statement word. I'm stuck with the words.
I just think figuring out a way to manage expectations about comparability and what this does and doesn't do without trying to define it, I think is, if we can do that,
we'll see.
Find a way.
Yeah, to that point, I think it's as simple as, understanding that maybe you can't touch or redefine comparability, but in opening sections as part of the objective, et cetera, to say, it's believed that moving in this direction will help governments compare this to this or that to that, just more elaborate it out to say explicitly what the value is, right? And it might have the word compare in it, which is okay. Right. But and maybe it doesn't. And that's OK, too. But just just to word it out, I think would be helpful to bridge that gap. Not to, see what I did, bridge the gap to your podcast. Your podcast. There's a new episode of the podcast out, right? Yeah. Just wanted to shout that out for you. So that's it.
Anything else on chapter 2? All right, thank you.
Thank you. So it takes us about, 9 pages to get into the meat and potatoes of the document. I mean, that just speaks to the complexity of just trying to get to what is that we're doing. So here we were focused more on the mechanics and the structure. So relating to, we're taking the literature and we're essentially putting it in a structure that communicates, that would enable a government to express their financial statements in this digital format that it's being designed at the moment. We try to make it as visual as possible, walking through, a sample of a government-wide net position to the data tables. We use only a few data tables to explain what the nomenclature was. And this was sort of our way of introducing, obviously, by 8, you see the very visual one-to-one, but that was intended to help anybody who's going to go to the Excel, and maybe that's the sentence that is missing in Gator. So when you go to the Excel document, you're going to see everything that is in figure 7 for every financial statement, for every module, for every special purpose government, yada, yada, yada. And so if you really want to see the taxonomy soup to nuts in a human readable form, just go to the Excel and read all the tabs, and that's what you're going to get. And so this chapter is intended to give you a sense of how to read and how to think of all these things, relating the guidance and the codification to the data structure. Then obviously we just, governmental fund reporting, we put it as a module, but it was just something that we like, and it just added in there. Here you begin to see stakeholder feedback questions. Happy to add, remove, delete, consider anything further. But that was the intent of the chapters, giving you a sense of orientation of how we transform guidance to data tables. And then I think there's something in here that we need to add then. So when you look at the Excel file, each tab read in this format.
Thanks, Paulina. I will say I really have many comments in here, but this is a place where that description of those things really stuck out to me. But absent that, I thought this chapter does a good job. And maybe I've looked at it, we've kind of been involved in the project, but I think this does a pretty good job, or a good job, of explaining what is complicated in really in easy to understand terms. I believe it does. So I kudos to you guys for something that I think is hard. And I thought we did a good job. You did a good job with it. Lisa.
I concur, Joe. I thought this chapter was excellent. I mean, I really could understand what you were doing. My only suggestions would be in the stakeholder questions to put in what figure you're referring to when you're asking the question, so they know where to refer back.
I think we went back and put them in everywhere. I thought that was a fantastic suggestion. Thank you.
Diane.
I liked this chapter, and I know we're just taking bits and pieces and breaking them apart and showing them as examples, but I got to thinking about special purpose governments that engage in single governmental programs. So, and we did have some of these in Colorado where it all is one statement. And so how does that all fit in?
I think I might have disclosed it in here or not together. So as we were working through, we put a disclaimer in here in the next chapter, but as that question keeps coming up, we decided to complete the thought in chapter 5. So here's what's going on. When we design the model in this manner, we envision the reconciliations to function in a certain way. And that's why it said somewhere, makes a comment about the reconciliation modules are not in the taxonomy yet. And the major issue is the special purpose engaging governmental activities. My favorite example is the mosquito abatements. So you have a governmental column, an adjustment column, which is a reconciliation, and then the government-wide column in a single schedule. As we work through all this, we wind up having to think through multiple permutations of how could that look, how to resolve the data model. And turn out that it wasn't as simple as we may have initially thought. And so what we're thinking about doing is the document explains that there's not a module included in the taxonomy today because of the reconciliations. But we're considering putting in chapter 5, which is the chapter that I owed you, An explanation of the potential approaches for reconciliations to solicit stakeholder feedback. I don't know if users use it as a whole, they use every line item of the reconciliation. So prompting that conversation is going to be important because there's a way to solve it hard and there's a way to solve it easy. And so it's kind of an important discussion, and it jumps up that one special purpose government because the reconciliation is embedded in the statement. There's also an implementation guide question. We have not found an example, but every time I said that in public, somebody gives me an example, so I'm hoping for it. There is an implementation guide question that permits governments, if you don't have too many major funds in the governmental fund, you can put an adjustment column in the fund statements. So you would have major fund, general fund, fund 1, 2, 3, total, an adjustment column that gets you to the government-wide financial. So you can have the reconciliation also vertical without being a special purpose framework. We haven't seen that, but the minute I say it, somebody will call me. So I'm looking forward to that. But it would have the exact same effect of the reconciliation that we're describing. If the reconciliation would be simply a standalone schedule at the bottom or on a separate page, somewhat simple, still has issues. I'll explain in a minute. It's a somewhat simple schedule, simple model, it would be fine. But it's when the reconciliations were then embedded in the statements, the data model created a challenge. The other piece that is causing a very interesting challenge is internal service funds. If internal service funds go to governmental activities or business type activities, problem solved. Well, still complicated, but the problem is solvable. But it's those governments that have the ability to put their internal service fund and allocate it into governmental activities and business type activities. So the internal service fund shows up in two places. Then the data model just breaks. I have no solution for that. I mean, I literally have to put the simplified solution and that's all. And so that creates a lot of tension in the whole cohesiveness of the model. And so we thought maybe it's a good idea to explain some of those concerns in chapter 5, because the consequences then, the easiest solution to model reconciliations is as a note to financial statements, is a single block of text. That prevents destroying the other pieces of the model, but it limits the user's ability to have detailed line items. So it's a give and take. And so we thought it was a good thing to raise in chapter 5. That's one of the consequences, but there are multiple other issues. So as we're expanding on chapter 5, you'll see it in there. Sorry, long explanation for that.
Jackie.
I like chapter 3 also. I like the whole document, actually. Chapter 3 too. The only one comment was something I'm sure you'll catch is in footnote 6, you probably need to explain what the N is, because in figure 7, you actually have an N, but it's not explained. The N in figure 7, you have N, you use N in the major or discretely presented component units, 0 to N, but you don't explain what the N means in the first footnote there, footnote 6, when you're explaining the figure 7.
Joe caught that. We move it up.
Very good, Joe.
Anything else on chapter 3? All right. Chapter 4.
So the last chapter, what is intended to do is, again, give sense. This is the part that most preparers get all very excited about, is the line items. I want to see my line item. Sorry, not a lot, but okay. So we were just trying to provide in here is an insight of how we have put it together. We're organizing them by clusters. They can expand and collapse. We give you the easiest example, net position, because everything else is just too long for us to show. The Excel spreadsheet will have the government-wide statement of net position in its entirety. Important to discuss with stakeholders is, yes, even if you don't find the line items in the taxonomy, you have the ability to put your own line item, and we give you these vehicles to enhance the meaning through anchoring and definitions. So all that discussing here. And we also took a stab of discussing the basis of accounting, an issue that we have discussed with you in the past. There's 2 different modeling approaches. From a preparer perspective, this is a yawner. They couldn't care less. I think this is a user issue, how they want to consume what's important to them. And so it's important to see that piece. We did put in, and I wanted to catch up with Lisa on her comments to see maybe if this is what we're heading. So starting in paragraph 10, it was really important to detail the relationships between the headers and the line items from a technology perspective. Not sure auditors and preparers are going to get too much out of that. It was a structural design issue. But the real important kicker of this, all that section is in paragraph 11, the last sentences, which basically says it would be hard to do validation. Every single human being that I spoke about the taxonomy goes, oh, validation. Then you go, no. And so it's important to understand, and maybe we need to expand, make it more clear, because I think you had a comment that it was a little bit odd. That was the problem, is we needed to communicate that there will be challenges with validation, that the way we're structuring by government-specific columns and government taxonomy-defined columns, government-specific line items and taxonomy-defined line items, that matrix makes the validation harder. In addition, you might also know GAAP does permit things not to foot. In the NICA, in the net investment of capital assets, if the debt is in one line and the capital assets in the other, it won't foot horizontal and vertical. The totals will, but not. And so GAAP already permits some of those issues. There are a handful of exceptions, but there are. And so even in the TCG, we get a lot of comments, ooh, we're looking forward to our financial statements to foot. Sorry, footing and tying is a preparer auditor problem, not a technology problem. A technology is not going to solve human issues. And so it was intended to highlight this was a very important piece in the technology side that we wanted to highlight, but if clearly maybe something that a user also may need to be aware. So we would love feedback to enhance that.
Yeah, no, I think I just didn't fully appreciate who that was targeted at. So when I was reading it, I was like, well, what am I missing here? Why are things not able to be validated, right? So I think that the way you explain it makes perfect sense to me. Just maybe, maybe it can be just fleshed out a little bit.
And we also took your feedback in here, and the questions will be referenced to the figures.
Jackie.
So I kind of had a question on figure 12. When I was looking at figure 12, I thought that one might be a little confusing for okay, you're already seeing that too, to the reader, because you're using different colors. The colors don't align necessarily. And I'm kind of thinking that you're saying that 3 and 4 there, the pink lines, are something that the specific government put in, and they're being captured as one item in the taxonomy as net position restricted, but the others are defined items in the taxonomy. But I don't think that just a general reader would get that. But like I said, I've been reading your stuff for a while now, so I think that's what they mean.
No, I appreciate it. It also goes too far at the margins. It's hard to read, and so we're recrafting. Thank you.
Anybody else?
So next steps. So as a promise, you will see the next version of this as a full DM, front matter, all the edits, the picture of the tree. In chapter 5, with all the chapter 5 is really about unstructured data, so all the notes, the MD&A, that sort of thing that we've spoken with you, which you just see it in a chapter. And then we are going to be coming to the short meeting. And we're going to be mailing August 17th. So on that Monday before, we'll have a week for you two guys to look at it. And then after that, we plan to, at the moment, our schedule is to have it posted by September 7th as a holiday, so 8th. And that's our objective, to have it out. We have talked about a 90-day comment period, so 12 weeks. And in the meantime, as Joe always alludes, we will keep on keeping with our other track and with all the line items and the development of all the rest of the things. Well, structurally, we do have questions to resolve from the DM. We would continue to work on the line item iteration and that piece of the work. It really is a big endeavor to even put the definitions. I always tease and remember when early versions of the taxonomy was developing, that's the hard accounting part, is coming up with those descriptions and definitions. We have a sample in the document in the Excel that is going to be attached. And there's a lot of work to get that done. So we'll just keep on working on the pieces that are not exposed and that sort of thing, so to make progress. But you will see it in the short meeting.
Thank you, Paulina and team. Any final comments from anybody? Questions? All right. Appreciate it. Important project. Really appreciate you guys continuing to plow through and put time in and continue progress. And we look forward to people's comments on the discussion memorandum eventually. And as Paulina alluded, she said, we will have a short meeting. So our next board meeting, because that concludes this board meeting. So the board meeting is about to be adjourned. We've covered all our topics for this time, but we will have a short meeting, which is scheduled for August 24th at 1 p.m. Eastern time. It is a virtual meeting, 2 p.m. Eastern.
Oh, I'm sorry, 2 items.
2 items.
Tech plan.
I hadn't gotten to that part. Did I say 1 item?
You said one.
I said what?
I think so. I think so.
I thought I was
I
getting
heard
to
it
that,
too,
and I was
but
going to
I'm
say
gonna-
we're going to
I'm
cover
gonna-
2 items, and it would be the last chapter here, as well as the tech plan approval for the final third of 2026. So we'll have those 2 items to cover at that meeting, and we'll see everybody then. Meeting adjourned.